Good morning, everybody. Welcome to the Moving Markets Podcast. It is Wednesday, September the 10th, 2025. Stock market has been open for just about 30 minutes, almost exactly 30 minutes as we're starting this. Dow Jones Industrial Average struggling, down a little bit, but the S&P and the NASDAQ are having a decent move to the upside. We'll say, let's see. I'm looking at my TV screen and looking at the screen here to see how up to date this is. There's usually a little bit of a delay on this. So let me refresh this one time real quick. Right now you've got NASDAQ up 75, almost 76, S&P up 33, Dow down about 80. The Dow Jones Industrial Average, in spite of the news, the really good news that we're going to talk about in just a minute, the Dow is being dragged down by Apple, Amazon. Amazon's taking kind of a weird hit today. I'm not sure why Amazon is down as far as it is. Percentage-wise, it's taken the biggest hit on the Dow, maybe dollar-wise as well. It's about a medium-weighted stock. Apple's about medium-weighted, and it's taking the second biggest hit. But you've also got McDonald's, Verizon, and Procter and Gamble down. So Apple is down for exactly the reasons that we thought Apple might drop after their big conference yesterday. Apple announced their iPhone 17. They announced some new features and gadgets for some stuff. They didn't give that clarity. Remember, we talked a couple days ago. They needed to say something about AI. They needed to convince people that their AI was doing something for your life, actually, doing something that was beneficial to you as an individual. And I just think they missed on that. And that was kind of sort of what we expected. Right now, our Apple trade is down just a little bit, and we might end up rolling our September 19th short puts out, maybe down. But we'll see what Apple does over the next couple of trading days. We don't have to move on it right away. Our Airbnb trade is just ever so fractionally profitable, but not much movement there. It's a tiny bit profitable simply because the short call and short put are both out of the money and losing value faster than the long options are. So, But the news today that is driving all of this, on the NASDAQ side, Oracle's earnings were like blowout. Not so much their earnings, but their guidance. Their guidance was just like astronomical blowout. I heard that Larry Ellison here, that his net worth went up $70 billion overnight with the rise in the price of Oracle stock. I mean, Oracle stock was up way up. I have been reluctant in the past to trade Oracle. You can see here they're up $95 a share, almost a 40% increase today, making Larry Ellison a ton of money. I've been reluctant to trade Oracle even on something like a non-directional long iron condor, which we do a lot of, because in the past I've done Oracle and I have done it, we've traded it successfully in the past, but we've also had times in the past where we've traded Oracle and they haven't moved enough in one direction to really get us to the profitability that we want. The regrets, the would have, could have, should have, that's rattling around in my mind right now about why did we not do something with Oracle? We'd be sitting on practically full profit right now if we had. But it's neither here nor there. We'll figure out maybe in the near future what to do with Oracle. Oracle might present a really good opportunity. Oracle might present us with a really good opportunity in the near future to do something like an in-the-money bull call spread. We might be able to go down to 280, 300 and get a really favorable price on an in-the-money bull call spread. So we'll keep an eye on that. Maybe it presents an opportunity. But here, so that news is helping the NASDAQ for sure. But this morning, PPI data I think everyone, me included, are a little bit in shock by this PPI data. I said as early as yesterday that I thought we would have a hotter number than these numbers right here, a little bit. The prior estimates or the prior numbers were revised down to show that it wasn't as bad as last month indicated. Every one of these is a downward revision from the previous month. And the actual numbers came in much better than expected, meaning lower producer price index, lower month over month, lower year over year than what the expectation was. A negative number on core month over month, which is fantastic from an inflation read. That's one of the first negative numbers we've had on an inflation read. And to me, this just absolutely 100% solidified that the Fed is going to give us a rate cut next week. I think this moves the needle. And this was at 90, this was at 10, now it's 88 and 12. If CPI numbers tomorrow are similar to what, and I don't think they'll be way better like these PPI numbers were. But if we get better than what the consensus numbers are tomorrow on CPI data, you're going to see a much greater chance of a 50 basis point cut. Tomorrow, the CPI numbers are expected month over month to come in at 0.3, year over year 2.9, and then core 0.3 and core 3.1. If you see a revision down of the prior numbers and you see the actual numbers come in beating what the expectation is, you're going to see a bigger swing right here on the betting market. This is what people are betting basically. Is this will, I think, drop down to around 60, and this will come up to around 40. That's my prediction if you get really good CPI numbers. Now, what's going to be challenging is if you get bad CPI numbers. If the CPI numbers show a little bit worse than what the analyst expectation is, then you're getting like conflicting information. And that's what we had happen last month. Remember, we had the CPI numbers came out first. We had really good CPI numbers. And then 2 days later, we had PPI numbers that really concerned everyone because they were much higher than expected. And that, the effect that had on the market was interesting because, one day we have things really kind of taking off to the upside, and the next day it's just basically giving back. So there's the S&P index, and if you go back to that last CPI report, I believe we were right about here. I think we had a really good day. Well, maybe I might be wrong on what I can't remember, but there was a day that CPI numbers were good and CPI numbers were good. We got excited, and then PPI numbers just crushed the market for a couple of days. Now, obviously, we've recovered since then. It's not, the market hasn't stopped going up, but it was interesting to see those numbers kind of, I don't want to say in conflict with each other, but one telling one story and the other telling another story. So it adds a little juice. It adds a little drama to what we're going to expect next week, to what we might get next week, whether we get something that is in line with what we're hoping for, which is the 25 basis point cut, in which case I believe the Dow Jones will sell off a little bit more. I believe the all indexes will sell off a little bit if what we end up with is just the 25 basis point cut, because I think that has already been baked in. This recent move up, I think this takes into account a 25 basis point increase. So unless we get 50, I think it'll be that classic buy the rumor, sell the news type of thing. We've been buying into this idea that we're going to get a rate cut. We're going to sell off in the face of getting exactly the rate cut that everyone is expecting, instead of getting something much greater than what people are expecting. So it'll make for some drama next week and make things interesting. I can't wait to see what that CPI report says tomorrow. I'm still working on some collar trade adjustments. We still have a couple of our collar trades. Bank of America has expiring long puts next week. Ford has expiring puts next week. Nvidia, we're out a little farther. Palantir, we have expiring short puts next week that are well out of the money. We'll probably move our long puts soon on those. SoFi, we're still in good shape with. Uber, and then I know Uber, we actually do have expiring puts next week, so we'll move those. I know a lot of people are still in Snap. I actually had my Snap shares sell away from me with some expiring puts. Got some good money for my shares, but they sold away from me. I'm overall very profitable on Snap, because this is just reflective of what I've done most recently. I've traded Snap for a long time. I'm going to get back into Snap and send out an adjustment for those of you that have puts expiring next week, or those of you who might be without long puts in place. So look for all of that. Probably today is going to be a big day with collar trade adjustments, probably 4 or 5. And I'm going to send some of them out during the day. If you don't see them until after the market closes, don't worry too much about that. That's just honestly not a big deal. Our open trades are keeping a really super close eye on AMD. For those of you in the triple play program that might still be in AMD, our 160 short put or short call is in the money, but it's been in the money a little bit. It's been out of the money a little bit. I'm watching it really, really close. We'll probably adjust it today or tomorrow if it stays in the money or goes deeper in the money. May get an adjustment soon on Palo Alto Networks, as well as possibly on Nvidia. But everything is up today. Yeah, there's a few stocks that are trading down, but most everything is looking good as far as our portfolio is concerned. AMD being maybe the one-off on that we're keeping a close eye on. So we'll keep watching. I'll send updates on Discord throughout the day if needed. And that's basically all I have for today. Have a great rest of your Wednesday, and I'll be back live 30 minutes after the open of the market tomorrow. Thanks, everyone. Bye-bye.